Hello everyone, welcome to the audit and attestation class. In this class, we'll be understanding in detail about the communication with management and those charged with governance at the planning stage of audit engagement. So let's dive into to understand more in detail about the communication with management and those charged with governance.
Right, now we are jumping on to the new topic, which is communication with management and those charged with governance. So any doubts so far before we on audit documentation, before we jump into the communication part? So far so good, everything?
Yes, sir.
Yes, sir. All good.
Okay. So now we are jumping into topic 2.5, communication with management and those charged with governance. So communication should be at planning stage, execution stage, completion stage. All said we need to do some or the other type of communication with the management and those charged with governance, right? First, let's understand at planning stage what all things we need to document or what all things we need to communicate to the management and those charged with governance. For the audit side, we'll be giving them engagement letter, right? Engagement letter need to be signed by both the parties. That is the reason it is being required to be communicate to the management and those charged with governance. Second important thing in audit section is the auditor responsibility. So that also need to clearly communicate to the management and those charged with governance, like what is being our responsibility, and more importantly, what is being your responsibility, and what is the scope of the audit, and or if there is any threat to the independence. That also we have studied in PCOB rule as well as AICPA rule, code of conduct. If there is any threat to independence, that also we need to communicate to the management and those charged with governance in advance. So let's understand one by one. First, engagement letter, we all agree in both, like audit engagement or non-audit engagement, both we need to sign up the audit engagement, and we need to ensure like management and those charged with governance is also signing up the engagement letter. Second thing in audit section is the auditor responsibility. For non-audit section, it's only professional judgment. Wherever we are taking any professional judgment, we need to communicate to the management and those charged with governance. For non-audit, it's very simple. Now coming to the audit side. In audit side, auditor responsibility is mandatory to communicate to the management and those charged with governance. So what all things you need to communicate when you're communicating the auditor responsibility? First thing is forming and expressing opinion whether the financial statement have been prepared by the management is in conformity with the applicable financial reporting framework. Second is obtaining a reasonable assurance is being our first responsibility is giving you opinion on the financial statement prepared by the management. That is my primary responsibility. My second responsibility is obtaining a reasonable assurance. I need to obtain a reasonable assurance. For that, I'll be performing inquiry, analyticals, and testing procedure, which include both, which include your walkthroughs, test of control, analytical procedure, and substantive testing, which include all the four kind of procedure which I'll be performing to gain the reasonable assurance on the respective account balance, transactions, and disclosure. Third, yes, sorry.
So we have also performed walkthroughs and risk control. We will also see, like risk assessment is there also.
Yeah, so we'll be here. What the topic is, what you need to communicate to the management and those charged with governance at the planning stage. That means what all things you all both need to agree, and what are things required management attention, right?
Okay.
So here we are discussing like at the planning, at the time of planning, what all things we will be communicating to the management. So first thing, we'll be communicating engagement letter, and we'll be ensuring like we both the party are signing the engagement letter. Second, we'll be communicating like auditor responsibility, our responsibility, what all things we will be doing. So in that, first we'll be giving them a comfort that we'll be performing an audit and we'll be issuing an audit report or audit opinion on that, based on our audit on the financial reporting framework which you have prepared. Second is we'll be obtaining a reasonable assurance by performing like respective audit procedure. Third is responsibility with respect to other information. That means like, does any of you have seen 10K of the Microsoft and GM have shared with you? Yes, no?
No, sir.
Such बता दो. Have you
No,
guys?
sir. We'll try not.
No, why you're not taking a look at it? I'm telling you, otherwise, like this is all theory. Unless and until you connect this theory with those practicals, then you will struggle in your exam. So it's been like I think I'm fourth or
Definitely
fifth.
we'll do it, sir.
Yeah, it's been like fourth or fifth time I'm requesting you guys to go through their financial statement. Right? In the financial statement, in addition to balance sheet, profit and loss, cash flow, notes to accounts, and audit report, there are so many other information also. What is auditor responsibility on those other information, which comes in management discussion? That also you need to communicate upfront that we are not responsible for this information. Right? Next is audit of financial statement does not relieve management responsibility. That is also you need to clearly mention that we are conducting the audit, but management has primary responsibility toward the financial statement, and management will never be relieved from that responsibility, despite of the fact we are conducting the audit. Make sense? These are all things you need to communicate upfront with the management and those charged with governance. Second is scope and timing of engagement. What all things you are going to test and at what timings you are going to test. For example, at the planning stage, you are discussing with the management, like every quarter, we will do the quarterly review, right? In the month of October and November, we'll do the interim audit. And in the month of January and February, we'll do the final audit, and we will issue the report on 28th February of next year. Right? These are timelines you will be discussing upfront with the management. And what all things you will be conducting is also need to be upfront discussed with the management. Like for example, quarterly reviews, interim audit, final audit, or for example, if you will be involving any tech specialists, if you're involving any actuarial, if you're involving IT team. So all those things you need to timely communicate to the management at the planning stage. Second is auditor plan to address the significant risk. So how do you address the significant risk? For example, you have identified the significant risk in, let's say, sales and incentive program. So what is your plan? What additional audit procedure you will be performing to mitigate those risks? That also you need to communicate. Third is materiality concept. You will not be communicating threshold to the management, but you will be making them understand your audit is based on materiality, and you will not be testing each and every line item. You will be testing all those line items which comes under your sample. Next is extent of the use of internal audit work. If you are planning to use the internal auditor, then you need to communicate to the management, yes, we are planning to rely on the internal auditor work, right? So there you need to mention whether you are planning to rely or you want to involve the internal auditor team to help you conducting certain low risk audit areas under your and your team's supervision. Those things also you need to communicate upfront with the management. Lastly, additional procedure requested by management. For example, management also wants you to perform some additional procedure. For example, management has opened a new branch in any location and they want you to conduct the audit of that respective branch. Right? Even though that is not material, but company has set up the branch first time, they want to ensure the integrity of the branch people. So that's the reason they want you to conduct the audit of the branch. So those all things you need to communicate upfront with the management. Make sense?
Yes, sir.
Yes, sir.
Okay. So next is circumstances or relationship that may impact independence. So if there are any circumstances, that means, for example, your spouse have certain amount of share of the client which you are conducting audit, that may result into impairment of independence, right? So those things you need to communicate to the management in advance before accepting and continuing any engagement. And then you need to communicate like within 30 days, my spouse is disposing of those financial interests, right? Circumstances or relationship that may impact your independence and significant consideration given by the auditor in reaching the conclusion that independence is not impaired. That means within 30 days, you will be communicating to the management that within 30 days, my spouse is disposing of those shares. So that's how I safeguard, I protect my interest. I safeguard your interest. I protect my independence. Fifth point and last point, if audit entity is receiving fund from federal government, right? We all studied about GAO and GAAS, right? Here, your entity, the entity for which you are conducting the audit engagement, they have received certain fund from the federal government, that is the grant. The auditor must determine if the audit is required and the percentage of coverage is required. So in that GAAS, right, GAO rule, we discuss if the risk is low, how much percentage coverage is required?
20%.
If risk is high,
20%.
how much percentage is required?
40%.
So this
Right?
coverage is for financial audit, right?
Not financial audit, for that specific grant audit.
No, so there are two aspects to it: compliance audit and financial statement audit, right? So these percentages are for that financial statement of that rule, right?
No,
So
like
basically under single
spending.
audit, there are two things: compliance and financial statement. Maybe I'm confusing
No,
between
three.
two concepts.
No, Gurmeet, there was three things. One is financial statement audit, which we generally do the audit. Second
Okay.
is the amount they have received and amount they have spent out of that.
Okay. 20% and 40% expenditure.
Yes, 20% of expenditure and 40% of expenditure based on the risk. And the
Okay.
compliance would be like they have spent in line with the government laws and regulations.
Okay.
So these all are, you can say, at the planning stage, you need to communicate to the management and those charged with governance.